What do ancient civilizations and modern civilizations have in common? They're still interested in gold. Gold is one of the most well-known currencies in the world. Although gold coins are rarely used to purchase items nowadays, yellow metal remains a highly valuable commodity. Gold is still popular in modern life, whether it's utilized in jewelry, technology, or as real coins and bars. Gold appears to be a non-starter in 2021. Even though inflation has accelerated by 6%, it has fallen by 6%. Is there a reason for its unpopularity? Certainly not. Instead, it's most likely due to investors' interest in other, more popular assets. The times, however, are changing. People are becoming concerned that inflation will continue to climb at a quicker rate. So, are gold mining stocks going to grow in 2022? Let's find out. Gold mining businesses such as Newmont Corporation, NEM plus 0.1% US, and Barrick Gold Corp, gold negative 1.5% Canada, have improved their tactics, bolstered operations, and strengthened their finances as a result of the decade-long gold price stagnation that began in 2011 to 12. The stock values of gold and gold mining firms remain favorable despite the current lack of investor interest. Both have price-to-earning ratios of less than 16.5 times, implying earning yields of roughly 6%. Furthermore, both pay quite good dividends. This combination qualifies them as contrarian value companies with strong revenues, earnings, and dividend distributions. Add in the potential advantages from a growing shift to gold investments as inflation continues to increase. Before 2021, inflation had been reasonably low for the previous 10 years or so. Concerns are growing now that it's acting up. Nonetheless, temporary and transitory prospects are tamping down inflation fears and stifling investor interest in gold. However, the difficulty is that inflation gradually slips in until it becomes too huge, to be dismissed as a side effect. It also changes its pace, walking, trotting, cantering, galloping, and then drifting back, albeit at a higher altitude. The slowing times provide hope, only to be disappointed when the run-up resumes. That's just a typical inflationary scenario. The United States is especially vulnerable to high and rising inflation rate due to today's harsh conditions and beliefs. After a year of record inflows in 2020, the gold price fell last year. Gold's attraction faded as global stock markets rallied and investors anticipated interest rate hikes in the United States in 2022. Higher U.S. interest rates tend to strengthen the currency, requiring fewer dollars to purchase an ounce of gold. Last year, cryptocurrencies posed a serious threat to the gold price. Those looking to diversify into assets that are safe from central banks' effective depreciation of paper currencies through money creation have never had so many possibilities. However, as we begin a new year, there are various reasons to hope that gold's recent underperformance can be reversed. First, inflation is proving to be more persistent and powerful than many expected. Last month, the Consumer Price Index in the United States reached 72%. When inflation last reached this level, it was 40 years ago, and gold was flying. Inflation is defined as a decrease in the purchasing power of paper currencies, which includes the quantity of gold that can be purchased for a certain amount of paper. Second, consumer spending, which accounts for 2/3 of the U.S. economy, may slow this year. Rising prices for essential products and services are putting strain on household budgets, leaving consumers with less money to spend each month. Much of the good news about America's economic recovery and increased interest rates could now be priced into the currency. If this is the case, dollar swings in 2022 may become a stronger tailwind for gold. Third, cryptocurrencies have yet to prove themselves as viable payment systems. Because of the chaotic nature of money flows, they've started acting more like extreme volatile risk assets, becoming increasingly connected with US technology stocks. Bitcoin is presently selling for around $42,000 US, down from a 2-month high of $69,003 US. Gold has demonstrated its ability to perform when the world throws us a curveball, and it tends to outperform other assets when they are underperforming. Interest rate hikes, which might pull the rug out from under debt-ridden areas of the economy or vulnerable emerging markets like Turkey, or an increase in geopolitical threats, which could start in Ukraine, the South China Sea, or Iran, are among the events that could derail stocks and bonds this year. If any of these threats or other surprise shocks materialize in 2022, gold may well continue to do what it has done in the past and provide a good hedge against decreasing asset prices elsewhere. Fidelity's Select 50 list of favorite funds include the 91 Global Gold Fund, formerly the Investec Global Gold Fund. Tom Stevenson's 4-fund picks for 2022 include it. This fund invests in a wide range of gold mining firms around the world. It can also acquire physical gold, EFTs, and interest in firms that mine for other precious metals, and and it presently has a 4.3% silver exposure. Investors should be aware that opinions expressed may no longer be valid and that they may have already been implemented. Because the 91 Global Gold Fund invests in international markets, currency exchange rates might alter the value of its holdings. Because the fund invests in a small number of firms, it may be riskier than more diversified funds. Financial derivative instruments are also used by the fund for investment objectives, which may expose the fund to a higher level of risk and create larger than average price volatility in assets. Due to its portfolio mix or portfolio management strategies, the fund has or is projected to have high volatility. So guys, that was it for this video. What did you think about our video? Let us know in the comments section below. If you are new to our channel, be sure to subscribe and ring that notification bell to get notified about our latest videos. Thanks for watching.